a lot of the things that I think we see happening are happening by not by mistake, but happening for real. Like if I'm right, and Trump doesn't want to retain the world reserve currency, that he believes it is a hindrance to, because of Triffin's dilemma, to any hope of ever reshoring manufacturing, then a lot of the things that he is doing, like putting 50% tariffs on India, like putting huge tariffs on Mexico and Canada and Australia and the UK, all of our allies, it has been done specifically so that all these countries around the world will trade in local currencies.
Well, okay, so if they're all motivated to train, they're all being incented to train in their own currencies. We lose, let's say we lose the dollar reserve status, which all the reset models that I have seen, every single reset model I have seen makes it so that every country deals in their own currency and there isn't a global reserve
Right.
currency. It's just a, yeah.
That's how
What
it's going
does
to be, in my opinion.
I think so, because everyone that I've seen, the multiple different models that I looked at, what do you think that does to our standard of living? Can the average person live better, or are we going to see a decrease in our standard of living?
Well, let's go back. And when we were it was an amazing benefit, and we screwed it up, because when we were the engine of growth and production and manufacturing and ran a surplus, it was a benefit for us. Subsequently, Triffin's dilemma says you'll always run into this problem that the world needs more dollars than we can give them through trade alone. So they need to sell their currency to buy our currency. Our currency goes up, theirs goes down. So over time, because there's that discrepancy, your manufacturing goes to where it can be made cheapest, where corporate profits become exorbitant because of this savings, huge savings in production. But we've hollowed out our manufacturing. We don't make anything anymore. You throw AI onto it, which hollows out even more of white-collar jobs and even some blue-collar jobs. You have 60% of the country with no college education. If we don't make anything, we're dead. And so it's gotten to the point now where our
We're a
standard of
third.
living is going to decrease. But how do you get it back? You bring back manufacturing. It's the only way. How do you do that? You revalue the gold, which devalues the dollar. You peg it to the bond market, the back end, gold, make it redeemable in gold with a zero coupon. You use the stablecoin passage of the Genius Act to create demand for short-term treasuries to fund the daily workings of the government. And with a devalued dollar, a higher price of gold pegged to redeemability in a 10, 30, 10, 20, 30, 50-year treasury, the 30 and the 50 may have a very small coupon. The others, 5, 10, 20, and wouldn't. They would have a no coupon, but redeemability in gold. That allows you to bring back your manufacturing at virtually no borrowing cost, and to, with the devalued dollar, sell your products to the world. You grow yourself out. Now, there will be a period of time, Sarah, we talked about this before, where I
Yeah,
think they
it's gonna
have
be
to bring in
bad.
universal basic income, because it will be very bad, because the cost of living will get exorbitant. Look, there's no way around this. We have 200 trillion in debt. How do you pay it off in an environment where the world is forsaking our treasuries, selling them, which pushes rates up? And when rates go up, everything implodes. So by holding it down, by finding synthetic ways of holding it down, it's an illusion and it's a stopgap, and ultimately leads to the same place. We've gotten to a place where you can't normalize your balance sheet, meaning austerity, without interest rates going up and everyone freaking out. And when rates go up, stocks, bonds, real estate, the banks and the insurance companies go poof. So what do? By pushing rates down like he's talking about, first of all, they can only push rates down on the short end of the market, the very, very overnight lending rate the government pays. In order to push rates down on the back end of the market, you have to have demand for it. And if no one else is buying it, well, then who buys it? Well, the Fed creates money out of thin air and buys it. That's monetization. That leads to Weimar Republic. That's hyperinflation. We're at that point now where there are very few
Well,
alternatives. So
well,
that's why I think they're going to do this.
we are moving towards a third world country kind of status where we have the
Yes,
really wealthy elite and then we have everybody else that's poor because our middle class is
100%.
totally being decimated. So I think that we are going to, like you said, go through that sludge. The elites won't make as much money in this country in either way. Everybody will suffer. But if they bring back the middle class, there'll be more people over time, there'll be more people with some wealth. The elites won't have that extreme difference. So they will make less, I think. And I don't think that's a bad thing. But we won't have
Over
so many
time,
poor. Yeah, over time. But I agree with you. I think the universal basic income, which I am so I was on Twitter fights with people saying how bad it is. And I still think it's really bad, but I think how bad it is, the alternative might be worse. I mean, I
well,
literally, and
right.
it's for me saying that after being so against it says a lot because I'm still against it, except I'm against the other situation even more because
Well,
it's
you remember,
so bad.
when people wake up to no welfare checks or food stamps, there'll be, chaos. As someone, what's his name, Gerald Celente says, when people lose everything, they lose it. But, at first, the lower rates, because of the Cantillon effect, will benefit the top 1% as their asset
That's
prices
right.
remain inflated, which locks out the average person from homes and investments. Higher rates is what would correct valuations, making assets more affordable for regular people, but would hurt the portfolios of the wealthy because these low rates make everything more expensive and make them more affordable.
It seems
And so there's more
counterintuitive.
demand.
It seems counterintuitive, but it's not. When
Think
you,
of your house. That's the best way to do it. If your house, before any of this happened, so let's just say it's 1999. Let's say it's 2010, and everything is relatively normal, and you could have 3% interest rates or 13% interest rates. Well, the higher the interest rate, the lower the price of your home goes because there's fewer and fewer and fewer people that can afford it. So the laws of supply and demand come in balance. If you jack rates way down to 3%, now everyone can afford it because money's cheap. So now there's more demand and the supply starts to fall. So, that's why it works that way, because the cost of money, if money's really cheap, everyone can afford it. And everyone understands in this country that debt is our birthright. For some reason, we've been fooled into believing debt is a good thing. I'll give you an example. I have zero debt. By the grace of God, after 36 years in this industry, I've been able to pay everything off. I have no debt. And my credit score keeps going down because I have no debt.
I
And
know
so
that
they,
sucks. You have to have
isn't that,
debt
I
to have
mean,
a
so
high
you're
credit
supposed to
score.
have
I know.
supposed to have debt and pay it off. We are being indoctrinated, and this falls right into the hands of the wealthy European bankers who established this system, debt slavery, servitude. They want us in debt. And so, they lower rates. Well, I can afford that nicer car, and I can just do 72 months, 0% interest, and I can buy a bigger house. And you know what? Maybe we'll expand our business and buy another building. Yeah, we'll have to take out another mortgage, but this is what they want. When rates are high, no one can afford it. So asset prices come down because there's no demand for it. That is counterintuitive until you look at it that way. But this is exactly what ultimately lowering rates is going to do. It's not going to make home prices more affordable for first-time home buyers. It'll be the opposite of that. Rates will go down, house prices will go up because more people will be able to borrow money and purchase it, which means there's less supply. It would be the higher interest rates that would drop asset prices, including real estate, way down.